Hi, I welcome you all on our channel, An Evolving Mind of Compliance. So today we would be talking about on the next on FATCA CRS. In my last video, I discussed about the individual FATCA CRS. But today I would be talking about the the company FATCA CRS. In my previous video, I have already described why the FATCA CRS, what is the necessity of FATCA CRS. It is an instrument to stop the tax evasion. See, there are two things, the tax avoidance and a tax evasion. The tax evasion is a crime, but tax avoidance is not a crime. Tax avoidance is kind of a legitimate expenses which you incur and you get the exemptions in your income tax against that. So, but the tax evasion means you are evading paying taxes on your income. So the FATCA here is a tool to eradicate the tax evasion practices from across the world. So companies could be divided in two broad categories. One is resident companies and second is non-resident companies. The resident companies are like, for example, a country over here in UAE, incorporated in UAE, would be considered as resident entity or a company. Similarly, a company registered outside UAE would be considered as a non-resident company for UAE. And further, this resident company, then a non-resident. Now, the non-resident could also be called as an offshore company. Further, the companies are divided into subcategory called active NFP and a passive NFP. Active NFP means non-financial entity. NFP stands for non-financial entity. So, what active NFP means? A resident company which is dealing in the business, which is doing a regular business, which is doing a regular trading, manufacturing, or ABC, any kind of a business in a country of residence, and they are generating the income from that business. The income generation of that company is from that particular business that are called active NFP. And the active NFP opening an account with any financial institution or bank in their country of residence will always be non-reportable. Will always be non-reportable. And second thing is, we do not require the FATCA CRS form for their UBOs, ultimate beneficial owners, because active NFEs are simply being made reportable or not reportable based on their country of incorporation and where they are opening the account, irrespective of its UBO, wherever they are living in any part of world. Let's say, for example, I have a company in UAE and I am opening an account in bank in UAE, but I live in UK. Although as an UBO of this company, ultimate beneficial owner of this company, I am living in UK, but this company is an active NFE regularly doing business in the UAE mainland or a UAE free zone and generating an income from that business will be considered as not reportable. And as a bank or a financial institution, we shouldn't be asking for UBO FATCA CRS. There is no point of it. It is clearly the guideline. Now comes the passive NFP. Passive NFP is the NFP, non-financial entity, which is simply drawing its income from an investment. Let's say, for example, I have done an investment in a property. I am generating income out of it. That property is a rental income. or I have invested the money into the shares, the bank shares, or whatsoever, and I am drawing the dividend out of it. There is no active business happening in this particular company. Let's say I have a holding company in UAE. That holding company is incorporated in UAE, and I have one property in UAE, and I am getting an annual rent of that property in that company account. As I've told you in my previous example, I am living in UK. So, although this passive NFP is a resident company in UAE, incorporated in UAE, but passive NFP reportable or not reportable will be decided based on the tax residency of its UBO. So here, this particular company, who is the resident company of UAE, incorporated in UAE, opening a bank account with any of the bank in UAE, will be marked as reportable because I am being the UBO living in UK, my tax residency is in UK. Therefore, the bank has to take my FATCA CRS to decide upon my tax residency, and I am being reportable being an UK tax resident. I will be marked, this company would be marked as reportable because I am being UBO reported. So this is the difference. The active NFP was not reportable, but passive NFP will be reportable because passive NFP is reportable or not reportable based on the UBO tax residency. So this is about the residency company. Now the offshore company or the non-resident company. The offshore and a non-resident company will be marked as reportable because they are being a non-resident company of UAE. So they would be marked as reportable by default. But the question confusion comes when an offshore company is registered as an offshore company within the free zone of that particular country. For example, a UAE offshore company registered in UAE free zone Jabza. There is one free zone in Jabza. A offshore company has been registered into it. So will the bank opening this account will mark it as reportable or not? That's the biggest question. Here we have to check where the principal office of this company, from where this company is being operated, where its UBOs are living. Based on that, if they are all outside the country, like for example in UAE, in offshore companies, there is no even visa quota. So the no person based on that company could obtain a visa. So that means the people of that particular company are living outside the country. They are operating this country from some country, maybe UK, maybe India, maybe US, maybe Europe, maybe somewhere else. So this company, although registered in Sharjah Free Zone as an offshore company in UAE, will still be marked as reportable because it's primarily being controlled from outside UAE. Similarly, the same offshore company, let's say if its signatory of that company is the resident visa holder and living in UAE. An offshore company registered in Jabza in UAE, okay, and it's not being controlled from outside UAE, it is being controlled from within UAE as its signatory, the person who has a control over the company is living in UAE. In that case, it will be marked as not reportable. In earlier case, it was reportable. In this case, it is not reportable because it is being controlled from within UAE. Similarly, a offshore company, let's say BVI company, a Cayman Island company, a Panama company, Malta company, any company comes to open an account in UAE. As a company It is a non-resident company because registered outside UAE, opening an account in UAE, we will be opening an offshore account. But again, we have to see from where it is being primarily controlled. If it is from the outside UAE, we have to mark it as reportable. But if it is from within the UAE, the control is from within the UAE, we have to mark it as not reportable. So this is what is about being resident and non-resident. Resident means active and passive. Offshore means whether it is being controlled from within the company, within the country or outside the country. So based on this, we have to mark it as reportable and non-reportable. So I hope I made the point very clear about how to mark the companies as reportable and not reportable. It will definitely help the people, those who are involved in this kind of a compliance within their organization. It is very beneficial video. You must watch it from start to end. You must circulate amongst your contacts. You must share, like, and comment. And please let me know the area where we could have more videos, where there is a lack of understanding, so that we could bring a more content which could have a more profound effect on each one of us, and we could discuss and we could create a more better compliant society, and we could make our organization a better compliant. And with this level of compliance, I am sure this level of compliance is not going to be detrimental to the business. This compliance will help in flourishing of the business in any of the company or the financial institution or the bank. So with this, I wish each and every one a very all the best, and thank you very much.